Everybody, y'all still good? Y'all still with me? Y'all need a water break? Let me know, god damn it. All right, we're gonna start off with breakaway gaps. Now we locked. I already know. All right, so let me share my screen and then we on it. Gonna run through these pretty quickly. All right, y'all let me know if y'all can see my screen and we'll go ahead. We'll go ahead and hop into it. All right, bet.
Yes, sir.
All right, so breakaway gaps. We talked about breakaway gaps in the fair value gap webinar, probably like 2023. So if you want to like know a little bit more about them, you can go there. If you just want to know about fair value gaps in general, I went in just a little bit more detail on breakaway gaps because there really is like two type of breakaway gaps. So I just want to go a little bit in detail on it. All right, so what are breakaway gaps? Damn, I ain't did this in a long time. All right, so breakaway gaps refer to price gaps that occur when the market opens and is establishing a significant directional imbalance, often signaling the beginning of a new trend or continuation of momentum. So y'all already know breakaway gaps. If you're in a trade and you see a breakaway gap, you're very happy. So yeah, these gaps are typically created during the periods of high volatility, such as the start of a trading session or after major news events. These are fair value gaps that we expect to stay open. Super important. All right, the concept. The sign of market intent. Breakaway gaps often indicate that smart money, institutional traders, is committed to a specific direction, leaving behind an area of imbalance, aka the big banks are in the market. I had to put that on there because it reminded me of that order block video I did. The institutional banks are in the market. So whenever you see that blast down or blast up, then you know, like, yeah. All right, so the first way you can see it, example one, is that breakaway gaps have swings in them. So you see this gap right here, it has a swing in it, swing high right there, 3 candle pattern, boom, gap. It was left open. Swing here, right there, boom, left open. Swing there, and this fair value gap, boom, left open. And they're just everywhere. Like, let's just see if we can spot some right here. Here's a right here, boom, swing left open, hit. Let's see if we can spot some more. They just everywhere. Whenever you see a gap with a swing in it, let's see, is there any more? There's one right there where here's a gap. There's a swing in it. You see that, boom, extends. Yeah. So yeah, you get the idea of breakaway gaps. There's one right, one right here. There's a little gap there. There's a swing in it. You see it gets tapped, boom, takes off. So that's one way that you can tell. That's one way that you can tell breakaway gaps. There's another one, and I want y'all to really go through your charts and look for gaps that have swings in them, and looks what happens after. Now, this is another thing too. Breakaway gaps are only breakaway gaps until the drawn liquidity get hit. So like this breakaway gap down here, this is obviously a draw liquidity up here. Like once it gets hit, then the price can come back and fill it. All right, breakaway gaps will also appear when a fair value gap is formed by the third candle closing above the second candle that formed the FVG. Now, when I first did the fair value gap webinar, I didn't really talk about this one because the other one's like way easier to see. But this is one too. Like, so you got these 3 candles right here, right? 1, 2, 3. We did a class on high probability fair value gap, so you already know that 3 candles the same color, that's like real displacement. That's like a high probability fair value gap versus one that was like black, blue, black, like, you know what I'm saying? So boom. The third candle, if the third candle body closes above the high, like the wick or the body, the wick of the candle, if the third candle closes above it, that's a breakaway gap. Because if you go into this candle right here, like the third candle's range, if you see breakaway gaps on a lower, or you see regular gaps on a lower time frame supporting price higher, that will confirm that this is a breakaway gap as well. Not only does it have a swing in it, they both have swings in it, But you can get breakaway gaps that don't have swings in it if the third candle closes above the second one. So here's a closer look at it over here. See 1, 2, 3. The third candle closes above this candle's high. You go into the lower time frame in this candle, you'll see gaps supporting this right here. Let me see. Okay, pro tip. A breakaway gap only exists till the nearest drawn liquidity is hit. The gap area may serve as a springboard for further movement or signal potential reversals. To incorporate breakaway gaps into your trading, you got to identify the direction of the gap. You can basically use this as support and resistance. You just wait for price to tap into it once you notice it's a breakaway gap, and then you can get in. Additional confirmations, to help you enter. What do you say no for? Not support resistance, bro. Everybody knows the real support and resistance is fair value gaps and order blocks. That's what I mean. You want to make sure that the fair value gap doesn't have a. All right, so this is another thing too. So breakaway gaps are breakaway gaps until the drawn liquidity is hit. Sometimes there are opposing PD arrays. So like right here, there's an order block. This could send price back down into this and fill this before the drawn liquidity gets hit. Nothing is 100%. So you have to be aware of that. Opposing PD arrays, you can't just think because it's a breakaway gap, it's 100% going to stay open. It'll probably 95% of the way stay open. But if it's opposing PD array, it could send price back into it if it has a reason to rebalance. Like let's say you at the halfway point, price need to go back to discount or something like that. It could do it. So be aware of that. The reason that price would trade back into a fair value gap, opposing unmitigated PD arrays may reverse price action back into it. So it's just like this right here. Like this is a breakaway gap right here. Not only does it have a swing in it right here, this candle, the bullish candle right there, closed right there above this candle's high, but there's probably a PD array to the left that pushed this candle back down into this fair value gap to fill it before it continued taking off. So that's what I'm saying. Be aware of that. All right, so here's the confirmation. Y'all see, we go back to this right here. These are the breakaway gaps. See the third candle closed above the second one. You can confirm a breakaway gap by going one time frame lower. This is the thing. You go one time frame lower. This is not like a 4 hour, 15-minute thing. It's like if you want a 4 hour, you need to go down to 1 hour. If you want 1 hour, you go down to 30 minutes. Like if you want a 15-minute, I guess you go down to whatever, 5 minutes. And you look to see, this is the third candle right here. This is from like right here to right there. Is there bullish order flow supporting higher? And you can see that it is right there. The big one was a daily fair value gap. Let me go back. This right here. See, the whole candle is not, you really got to go in the whole candle's range, but I just had a fair value gap mark, but you go in the whole candle. All right, and you go in there, that's a daily. You see the 4 hour, one time frame lower, daily to the 4 hour. So on a daily candle, I went to the 4 hour, and now we got the gap supported right there perfectly. So that's another form of breakaway gap. It's two different forms of it. All right, so closing statements, breakaway gaps are fair value gaps that we expect to be left open. This shows us the market's true intentions on direction, and we can confirm this by looking into the fair value gap on lower time frames or paying attention to which fair value gap has a swing within them. We can use this to our advantage by getting in line with the current order flow. This is pretty simple stuff. If y'all have any questions on it, feel free to let me know.